Hey guys, it's Julie Gravengood from Clarity Realty bringing you another episode of Let's Talk Real Estate. Today, I want to talk to you about getting a mortgage lender and what to look for. And maybe just as importantly, what to avoid. First, I just want to make a point of saying that I know that interest rate and fees charged are really important in selecting a lender. But to my mind, before we even get to that question, we want to make sure that you are talking to a lender that knows what they are doing and has a good reputation in the industry. Well, unless you're in the industry, how do you know if someone has a good reputation or not? Obviously, ask your realtor, but there are other signs. The thing that gets you a bad reputation as a lender is when you take minimal information from a person who's looking for a loan and then give them a pre-qualification letter. But then when they actually pull credit, look at their supporting paperwork, there's something there that might prevent them from getting a loan or at least cause some stress, and all of a sudden you're chasing around paperwork. Some of the banks that heavily advertise are notorious for doing this because people are understandably interested in instant and easy pre-approvals, and they are just giving the people what they want in the moment. But we want our viewers to have a better experience, so we're educating you as to why this shouldn't be what you want. Ultimately, what you want is a smooth process that ends in owning a house. And an instant and easy pre-approval often doesn't lead to that because it's not always a straightforward process. These quick looks can end up causing a lot of frustration when things are more complicated than they look on the surface. So if you were able to get a pre-approval online without giving them much information, then chances are really good that this lender has a poor reputation and it will either be hard to get your offer accepted or you do get it accepted, but then you have a bumpy process. You need a lender that asks a lot of questions and asks for a lot of paperwork up front. And I get it, it's a pain. Might even take a day or two instead of instant answers. But it's worth it because it saves so much time and money in the long run. Once you're comfortable that you're working with a lender that is thorough and you have a legit pre-approval, then start asking questions about rates and fees. Ask them for what is called a good faith estimate, which will detail out your payment and closing costs. When you're looking at this, there are some things that the lender needs to include, but they don't have any control over, such as your estimated property taxes and homeowners insurance. If you just look at the bottom line of costs or payment, this number may be deceptively high or low because it's all a guess until you have a specific house in mind. When you are comparing fees from lender to lender without knowing which house, focus more on the fees that actually go to that lender. If you just call someone and ask, hey, what are your rates? You're only getting half the story because sometimes a lender will have lower rates because you are buying what they call points, where you pay higher fees to get a lower rate. If you're focused just on rate, they can make that happen for you by increasing your fees, which may or may not be the best thing for you. You have to look at the whole picture. If you are thinking that you'd really just like to have a great real estate agent to be making sure that everyone you're working with is quality, please get in touch with us. We have people all over the country, and make sure you can get connected with someone who is not only knowledgeable and experienced, but also a personality fit for you. I hope this helps you on your home ownership journey. See you on the next episode of Let's Talk Real Estate.